Welcome back to Kitco Mining. I'm Jeremy Safran, and we are navigating a truly remarkable time in the markets with persistent inflation and signs of slowing economic growth. Investors are aggressively seeking safety, pushing golds towards $3,900 an ounce on the spot side. Just an incredible chart to look at. Now, this has ignited the gold mining sector, putting a spotlight on companies with high-quality assets in safe jurisdictions. And the key question for investors is, which projects are best positioned to capitalize on these historic prices? Now, one company at the center of this conversation is Newfound Gold. They're advancing a significant high-grade discovery in Newfoundland and have just released their first economic blueprint. Here to discuss that plan is company's CEO Keith Boyle, who brings 4 decades of mining experience and a recent track record of fast-tracking a major project to a successful acquisition. Nice to see you, Keith. Thanks for coming on the show.
Thanks, Jeremy. Good to be here.
Let's start with that asset. I mean, you just heard me here talk about the price of gold. I've been talking about it all year. Your company's first economic study looked great at $2,500 gold, but with today's price near $3,900, I mean, what kind of a cash flow machine could the Queensway project become here?
Well, if I give you a couple of data points, our preliminary economic assessment, our PEA, outlined at $2,500 that our internal rate of return would be 56% and our NPV, over 700 million. But at 3,300, we ran the numbers and got to 197% IRR and 1.4 billion in NPV. So a real high torque. With gold price, I think our NPV goes up about 80 million for every $100 an ounce US.
Wow. Crazy numbers here. I mean, obviously we're watching some of the majors print cash at this point. And I'm curious, many large projects require a really massive upfront capital. Your plan is different here. I mean, it's needing a much smaller 155 million kind of for this starter mine that helps fund the expansion. How important is that stage discipline approach to building a mine in today's market?
Well, we've seen a number of projects, especially the large capex projects, go over. They come out with a number to start and then they go over. Well, if you start small, your overage is much smaller and a much, smaller impact, smaller risk, I'll say, and much more manageable. When it's that small a capex, you can put your arms around the key activities that drive those numbers and really reduce the risks of any overrun. On the second side of it is that you're not having to dilute shareholders as much when you're financing the project. So it's a much higher return to shareholders by starting small. And the advantage we have is we've got a high-grade core. 75% of the ounces are in 25% of the tons. Yeah. And so that high-grade core really allows us to start small, but high cash flow to fund the expansion.
Now, listen, I mean, you fast-track Oko West all the way to an $875 million takeout. We can ask you about what lessons from that experience you're applying right now to Queensway. But you and I were chatting, Keith, and I mean, you joined this project and the idea was to get it kind of going relatively quick here, and you're talking into here.
So what we said was, look, let's take Newfound Gold and let's get to cash flow. Yeah. And so when we look at the Queensway project, our timeline is permit next year, start construction in 27. It's a short construction period of 6 months. And so, the latter half of 2027 will be in production at Queensway. But the opportunity came along to then acquire Maritime Resources, which is, will be sending its first ore to the mill this quarter. This fourth quarter. So, so really, once the transaction closes, which is expected to be somewhere in mid-November, we'll be able to say that we're producing gold by the end of this year and ramping up next year. So, taking advantage of these high gold prices, which is quite exciting.
How do you integrate that, that shape into Queensway's development path? Is it kind of a stepping stone or does it, de-risk the project a little bit?
It de-risks it not just a little bit, a lot. Because when you start looking at the cash flow that would come from a producing mine at today's gold prices, and it allows us to then I'll finance the build of Queensway at much better cost of capital for us, get much better deals. And two, we've also secured access to processing facilities, which we were relying on as part of our phase one, was not have to build a mill right on site. And so by accessing milling facilities, existing permitted milling facilities, that fast tracked our phase one at Queensway. So we've de-risked, twofold, really allows us to finance and to access to the mill.
Yeah, you've been moving extremely quickly. I mean, the study is compelling, but you also have the geology to back it up. I mean, these recent samplings return incredible grades, like 64.8 grams per ton of gold. How important is it to physically see that high-grade mineralization at surface when you're looking or de-risking this kind of project?
Well, you mentioned earlier, I've got 40 years, more than half of that is in narrow vein gold in the Abitibi Timmins camps. And I managed the Dome mine up in Timmins where, we were mining an open pit with lots of narrow vein high grade gold. And the one thing that you do like to see is those veins with the gold in it. And luckily for us, the team really did a great job by exposing on surface the high grade veins from which we'll start mining, and we're able to map them, sample them, and really use that to interpret and build the geological model. That de-risks the geology, geological interpretation, and the resource, which we've seen some faux pas, if you will, on other projects because they have to wait to get underground. We don't have, it's not our case. We see it and it's right at surface.
Yeah, and I mean, how does that high-grade mineralization actually translate into the mine plan and kind of this early cash flow, right?
Well, people get the concept of a starter pit, the small pit, and that's really what we're doing. We're mining out the veins that are there, the high-grade veins that are there with small pits. And once we've gone through that first phase, we'll be building a larger plant and then expand the open pits to then mine out the rest of the material and process the lower grade stockpiles that we will have built while we're mining these smaller high grade veins.
Yeah, I mean, Keith, on the note of building confidence, I mean, your shareholder registry includes some long-term backers like Eric Sprott. I mean, as CEO, how important is it to have that level of institutional conviction behind you as you advance this kind of project?
We, we're so appreciative, of Eric in particular, but since putting out our resource, getting out in front of the institutions and explaining the plan, they really liked it. And so when we raised $63 million in June, the registry from an institutional perspective went from basically 0% to over 14% as institutional investors. So, and good names. And so for us, we're really appreciative of the support and backing and confidence that they're showing in us, and we want to deliver.
Yeah, I got to ask you about the M&A kind of angle too. I mean, I know you can't say much, but your last project was successfully acquired for over $800 million after your team significantly de-risked it. I mean, as you add value to Queensway, how do you view the M&A landscape for a high-quality asset like this in the current market?
Well, I mean, every call it mid-tier and major is looking to add production, add resources to their balance sheet. We'd be no different. I think for us, we're a bit different is we're off and running, and we have the capability and the financing ability to execute on our own. So whoever would like the project and would want it, they'll have to pay an appropriate price to get there.
Yeah, yeah. And it brings me to jurisdictions. I mean, safe jurisdictions, especially these days, seem like they're in short supply. Do you see that as a premium that could make Queensway more attractive to majors looking to replace reserves?
It's a premium for especially those that have other operations in jurisdictions that aren't as safe. So
Yeah,
it will de-risk their production profile as well. But
yeah.
like I said, we're off and running, and we're on track. The 155 million is unlocks the
Hmm.
over 170,000 ounces at Queensway alone, and when we put the maritime production on top of that, we're basically going to be a over 200,000 ounce producer in the not too distant future, with a property package that's 110 kilometers long by 20 kilometers wide. So if I were to tell you we're starting our first mine in a camp from Val d'Or to Rouen, that's a significant land package that people will step back and take notice. And we've got
Yeah.
lots of targets in that package.
Yeah, I want to ask you about the package because it is a very large one in Newfoundland. Before that happens, I mean, obviously permitting is a major hurdle for any new mine, and your study notes that it's got some proximity to a river, which often means a more complex kind of review. I mean, what do you see as the biggest hurdle in permitting path? What's the strategy to keep it on that 2027 as we know you do?
So, one, the government has been extremely helpful. And
Hmm.
one thing that I'll go back to your original comment, fast tracking the Oko West project.
Yeah.
One thing that we did was approach the government before submitting our full application and worked with them on what were the key aspects that they wanted to see covered in a permit application. Well, it so happens the Newfoundland government likes to work that way as well. And so we're working with them so that when we do apply, there won't be surprises. And we're consulting with the communities around so that even they will have no surprises. And so being transparent and working with the decision makers is a key part of fast tracking a project through the permitting process. We've
Yeah.
allotted for we've allotted for a year, but just to give you a couple of data points, Firefly received their environmental assessment certificate, I'll call it, in 45 days,
Mm.
working with the government ahead of time. So, Newfoundland want mines. They've said they want 5 mines by 2030. We'll be one of them.
Yeah, yeah, it's great to hear the policymakers are on that side once again. Okay, beyond this first mine, I mean, we talked about it. You briefly brought it up. This massive land package in Newfoundland. I mean, is the ultimate vision here to build not just a single asset, but a whole new mining district?
That's as far as the vision goes. That's the vision we have. We've
Yeah.
got some really fantastic targets. We've got what we call the dropkick target, which is 11 kilometers to the north. That's really shaping up well. We've been drilling there since June. Results should be coming out in the next weeks, and then we've got another large. I'll call it. I won't say showing. I'll say an emerging target that is 60 kilometers to the south, and everything in between really is just more exploration that has to get done. So, this package is big and could host a number of mines.
Yeah, right on. That maritime acquisition too sure sped things up here. I got to ask you, I mean, to sum it up for the audience, we've been watching the price of gold and in this $3,900 gold world, and we know it might come off a little bit, but it sure seems stable. What is the single most important kind of reason for an investor to be looking at a newfound gold today?
Well, I think one, you mentioned it, the lever to gold price. We
Yeah.
saw it in just our small little project. And I say little in relative scales, and other large gold mining projects.
Mhm.
But what it does do is spits out a lot of cash flow because of the grade. And the torque of the gold price really does enhance that. Second, it sure does bring, some of the lower grade material into a mine plan that wouldn't have been otherwise. And so it really does open up our whole exploration horizon even more. And I think, and watch this space, because being able to discover one or two or three other deposits, that's a real possibility on a land package like ours.
Yeah, and everyone's looking for it. What a time. Before I let you go, I mean, you've been mentioning you've been in this 40 years, Keith. I mean, did you ever think that we'd see $3,900 gold this year? Is there some mornings you just wake up and you go, holy cow?
Yeah, in fact, I was having lunch and we had the same conversation with a colleague. And I remember back in 2008 when the financial world was collapsing. I was building a small gold mine, and we were running basically on fumes and needed to pour gold, which we did, and turned the corner and then started producing and generating cash. And man, were we happy to see $1,000.
Yeah. I mean, just watching these little cash machines, as you call them. All right. A compelling story with an experienced operator at the helm here. Keith Boyle joining us now. Make sure you check out Newfound Gold. Thanks for your time on this exciting asset. Great work.
Thank you very much, Jeremy.
Thanks, Keith. Appreciate it. All right. That's all for now. For Kitco Mining, I'm Jeremy Safran. Lots to come. Be sure to hit the subscribe button. Thanks for watching, and we'll see you next time.